This program is brought to you in partnership with the Central Bank of Nigeria. We'll be taking a look at happenings on the business scene for the week this week. Started on the 10th, or rather the 9th, and ending right now on the 13th. So this week, quite a few things have happened, although we might do some crossover into last week, especially when we come to the refinery situation, because remember, on this show last week, the NNPC GMD, Bayo Julari, said that, the refinery, restarting the Port Harcourt refinery specifically, will be a waste of resources. But here we see on Tuesday, Wednesday, that the Penguin president, Festus Osifo, said, it's 90% completion and will start in 1 week's time. What's that contrasting views? What does that mean? Those are the kind of things that could maybe do that, walking. But joining me virtually to have this conversation is a very important guest that's joined us on the program a few times, but has joined us from Lagos again. It will be the Adegboyega Adebajo. He is an economist and lead advisor, Amethyst Ashlar Advisory.
So good morning, Chiamaka, and as always, it's a pleasure to be with you on Trust TV.
Yes, it's good to have you. How's Lagos this morning?
Well, pretty warm and humid as always. No sign of rain, but cloudy and very, very warm, So that's it.
Okay. All right. Now, let's start off with that issue of the Penguin story, because since that's coming over from last week. What do you make of this contrasting views between the NNPCL GMD, who we should take his word for, I believe, if he's saying that the refinery that they are rehabilitating, or they're supposed to be rehabilitating, is a waste of resources, but the Penguin guys say, it's 90% completed and 1 week should start running. What should we do with this contrasting information?
Well, first of all, I do recall that as far back as 2013, and that may have been soon after the attempts to privatize the refineries. I had quite a discussion with some colleagues who at that time were advisory institutions to the BPE in that attempt. And we felt more than anything else that the refinery are scrap. We're talking of refineries that are over 40 years old. I'm trying to think of what piece of equipment or what factory is 40 years old that has not been consistently maintained and run and perhaps even upgraded in terms of capacity. If those things have not been done to those refineries, then they are scrap. And way back then in 2013, my conclusion was that there was scrap. They're not worth more than the land on which they're sited. So when I heard the NNPC GMD making that statement, I was actually pretty glad that at last someone's, telling the truth and seeing it. I wouldn't go by the Penguin chaps at all, because whatever their opinion is perhaps colored by the need to ensure that their union members continue to have a job. And therefore, they will probably not want the refineries to be shut down or sold off to somebody else, where the members of Penguin who work there will have to go through a new recruitment type of engagement. And we all remember what happened with the Dangote refinery and the staff working there who were members of Penguin and how it went. So that's my take on this.
Okay, so if I understand you correctly, Festus Osifo and Penguin are more worried about having people earn salaries for work not necessarily done, as opposed to having the economy thrive.
Yeah.
That's not
exactly. Yeah, the labor unions that's their primary concern. So it's not economic, whereas with a Bayo Julari, it is economic, it's performance related. He's going to be judged at the end of the day by his performance, by his use of the resources within that are his responsibility and what they have produced.
Okay. All right. Now, so Yesterday we saw this on the news as well that capital importation has actually seen some very, very capital inflows rather has seen some very, very nice numbers. The trade investment minister made that clear. About $21 billion last year was what came in sharply from the 12.3 billion actually, and sharply again from the 4 point something billion in 2023. Now that's lots and lots of progression that we're seeing there. And the ministry said it plans to deepen trade facilities and boost exports and investment this year as part of a broader efforts to strengthen Nigeria's industrial base. So now, I'm sure this is good news, you know. Oh, beautiful. We've gone from 12 point something to 21 point something, $9 billion more. However, I have a question. Would you say that these numbers, are they really what's the word, realistic, or are they due to, you see how, okay, I'm going to use the FX to have this ask that question. Oh, I have $100 a few years ago, and or I got about, what's the word now, it was about maybe 14,000 naira at 142 a dollar, and now that same $100 is now about 1.4 million naira. Is that a case of I've got more money, or a case of inflation?
Yeah.
In that,
Well, I mean, you're bringing in, or devaluation, as it were. Yes, you are bringing in so many factors into it. And this is why sometimes for those of us who are perhaps economists that tend to challenge what's obvious, I, for one, tend to talk about purchasing power parity a lot more. So the exchange rate is one thing. So you ask yourself, when you convert $100 to Naira, 5, 6 years ago and today, what can that Naira amount get you? And that becomes a key thing as to what exactly it can buy. And that's the crux of it. So if it's going to take a lot more Naira, and that's an inflationary factor that's coming into play, and being out there, that means that it is, yes, the amount of dollars necessary to change. I wouldn't want to just talk about devaluation in that sense, because if inflation was as high as it was in late 2023, most of 2024, then there's no gainsaying that the Naira couldn't have maintained its value, as it were. So it comes back to purchasing power of the Naira. What could that Naira have gotten you 5, 6 years ago, and what is it getting you today?
Mr. Adegboyega, I think maybe I've taken this away from what I was trying to say. I was asking the question is, could we tie that scenario,
Okay.
that is, if it's some sort of similarity, there might not be, but could we tie that to the, okay, we got 12 point something billion. Is this actually tantamount to the amount of money that really came in, or is this due to inflation or devaluation or disinflation? These capital inflows, money that has come into the country in 2025, rising from 12 to 21 billion dollars. What could we say were the reasons behind this? And could we say that maybe inflation or something had anything to do with it?
Well, no, I wouldn't put it down to inflation. And so if I were to correct my initial thoughts as to what you were asking, it's about really, is there something domestically to have attracted all that sort of money, that increase in foreign investment to come into the country? Yes. If you cast your mind back as 2025 progressed, the signs, the reports, the indications coming from the IMF, coming from the World Bank, they were essentially positive. By mid-year, there were signs that the economy was a lot more stable. The macroeconomy was a lot more stable. Inflation was trending down. The Naira was holding stable, slightly improving. Monetary policy was tight. The gap was always with fiscal, the fiscal policy. So yes, it is true that that money has come in because the country as a whole has looked a lot more attractive to investors. So yes, that's how I will respond to that.
Okay. what more do we think, do you think could be done to take us from this $21 billion to maybe $30 billion, or even, let's say $49 billion, as the case may be? However, just get us to a higher dimension. What more could the Ministry of Trade and Investment do to help us see this more numbers coming in? Again, particularly as we are in a pre-election year, and of course next year is an election.
Yeah. So, I mean, pretty good question. Funnily enough, I honestly don't like the idea of governments naming budgets. Practically every state, the federal government, they tend to give the budget a name. This year's one is said to be the budget of consolidation. And that's true. Having created some degree of stability, it's necessary to consolidate on what has been achieved, so that its impacts can go deeper into the economy. But it's also important to be mindful of the risks that are still hovering around. And these risks range from, external shocks, as it were, to the fiscal deficit we have, and of course, sometimes the conflicting statistics that come out of Nigeria. So if we are to see an increase, if we are to come to a situation where foreign investor confidence in Nigeria is pretty sound and attracts a lot, and typically these monies come in to provide infrastructure projects in the country. Although we do also see signs where a lot of this money just comes in through government borrowings. So there are investments in short-term natures, and we tend to refer to that as hot money, because once there's any tick, a negative tick in any of the indices, you're going to see this money exiting the country. But where it's towards infrastructure projects, it's a lot more stable. And this is where the hope is that as the economy consolidates, it tends to look more stable. The risks are mitigated. You will find a lot more investors coming into the country. But you did sound a note of caution, Chiamaka, and that's about the elections coming up. I do not expect the degree of optimism we've seen in the recent past in the months ahead. And that's because usually when there's an election year, there's so much tension building up in the country. People start talking about the country breaking apart. It's a lot for the central bank to hold on to the monetary policy and try to keep things going in the direction it wants to, because the distortions are a lot, and it's not because the risk is high. So those investments in instruments that can be exited will be exited as much as possible. And this will lead to some kind of effect on the Naira, because it's going to be the Naira investments looking for dollars. But at the same time, as has been pointed out, we tend to also see at that time that politics tends to attract US dollars that has been kept abroad back into the country to fund campaigns and to fund election-related activities. So there tends to be a trade-off in the inflow and the outflow. The numbers to that aren't always totally clear until much later afterwards. So we can't say where the net effect will be, whether it's going to be more dollars coming in the Naira, or more Naira, being sought at the end of the day. So that definitely is a cautionary aspect of the months ahead, which we need to bear in mind. And these are factors that play. But generally speaking, and I take that from the trend that we have seen over the past elections we've held in the country, foreign investments tend to reduce, they tend to exit the country as we move closer to elections. And once the elections are done and things are a lot more stable, they come back into the country.
Okay. All right. Now, you said something, and we're going to just in that direction move towards the budget. Now, the Nigerian Senate has the actually defended a 25.91 trillion naira fiscal deficit in the 2026 budget, with total expenditure projected at 58.47 trillion naira against revenues of 33.19 trillion naira. Now, debt servicing costs are estimated at 15.90 trillion naira, representing approximately 27% of total expenditure and 48% of projected revenue. Now, what does this impact assessment have to do with anything? It will increase borrowing pressure. Such a significant deficit necessitates a substantial borrowing, potential crowding out private sector credit, and increasing debt vulnerability. Now, debt sustainability concerns high debt servicing, costs limit fiscal space for critical infrastructure, education, healthcare investments, potentially hindering long-term growth. Revenue mobilization imperative. The wide gap between revenue and expenditure underscores the urgent need to improve tax collection, expanded tax base, and reduce revenue leakages. Now, of course, inflationary risk, that's one of the things that we keep dealing with. Financing the deficit through monetary expansion could reignite inflationary pressures, undermining recent gains in price stability. This is a very big issue. The budget's defense is currently going on. Different ministries are coming to, speak about what's been given to them. And, away from that, we've seen some stories whereby by sidelines, you see, 200 and something was budgeted. Like early this morning, I saw 200 and something budgeted for the health ministry. However, it was just 58 or so that was released to them. And, but that's a different conversation for another time. What do you make of these numbers where we're having this deficit, 25.91 trillion naira, and already we're having about close to half of our projected revenue going to debt servicing? If we have to borrow another 25.91 trillion to fund the budgets, how do we come out of debt? Because, where do we get to where this is not what we have to do every time?
Well, Chiamaka, you've touched on one of those aspects, which is a key risk factor in economic growth for the country over the next couple of years. If the budget deficit is at that level, it's pretty dangerous. And I say it's dangerous not because of the percentage that deficit holds to expenditure. It's about 27% of expenditure, but it comes to about 48% of revenue. And let's clear this. We're talking about a deficit because we're saying the government plans to spend much more money than it's going to earn. And to answer your question directly, the first thing is, as an individual, if you keep planning to spend more money than you're going to earn, you are going to continue to be in debt. Now, debt in itself is not a bad thing. What is key is that when you borrow money, you want to use that money for what is productive, what is developmental, and what tends to provide a long-term benefit to yourself or to the environment. Looking at the case of Nigeria right now, 48%, okay, that is the percentage of the deficit to expenditure, to revenue, sorry. So 48% of what we're going to earn is going to go into that. Now, for whatever reason it is, we need to bear in mind that unless and until we can actually start to measure and show direct impact in the key sectors which are going to be affected by this deficit, and that's or by debt repayment, that's health, education, two critical aspects which directly impact the human resource in the country. It's going to be a problem that's just building up there, and one day that bubble is going to burst one way or the other. So yes, of course, this is a concern. Now, let's also look at the fact that the government ultimately is going to borrow to fund the deficit. So possibly, I'm not saying that with newly borrowed debt. And whilst that may work if the debt was spent, and I say that again, on developmental or growth factors or infrastructure, if it is consumption that we're borrowing money for, then it becomes a problem. Just yesterday, I believe, INEC stated the amount it would require for
for the elections.
For the elections. Yes, that's a significant amount. Now, although the elections would hold next year, but INEC is going to have to start spending money this year. So I wonder what percentage of that amount is going to come out of the 2026 budget and what percentage is going to go into the 2027 budget. But clearly, we need to hold elections. INEC needs to be funded, and that is going to be significant expenditure, which of course will mean that other key areas of social services will be impacted by not, getting the kind of funding they need. And this is why I tell a lot of businesses whenever there's an advisory session going on, that as we get closer to the elections, we see a lot more of politics and much less of governance. And that's the indication we're getting in the budget right now. All the factors of the budget are pointed in the direction where the indices must look good. It's not so much about health, education, or maybe infrastructure in the short term. Okay, in the short term, those are or could be seen as long-term objectives. But when a government has a plan, it also plans to fund that plan. And in 2026 and 2027, what we're seeing is the government's own plan to fund those 2 years. And the most prominent aspects of these years, particularly up to about halfway through 2027, are the elections. So what we find is a lot of money is going to be spent to get the elections done properly. And when we look at the controversy that came up last week, maybe some funding has to go into providing some of the infrastructure that INEC will need to ride on or level on, because that infrastructure is not there. So amongst other things, like you said, it is somewhat worrisome. And I hope that when we get past that time period, say about August next year, we will not see some of the indices we're happy about today looking a bit awkward or looking a bit funny.
Okay. All right.
Yeah.
So one of the other things that's coming out from this story of the budget is the fact that revenue has to be generated, and now we know the tax reforms and all that's happening. Do you believe that with these new tax reforms that there will be some, ability to mitigate the gap between revenue generation and expenditure?
Well, for me, the tax reforms are good on paper, but the first set of people you are going to have are those who are already paying taxes. And that's the way I see it. A lot of parts of Nigeria are not so reachable in terms of tax administration. And so what you'll find, and perhaps, starting from this year, we're going to start seeing some statistics in terms of which states are contributing, towards tax collected at the federal level, and what states are generating in terms of tax. And I will then want to compare those collection figures, particularly for the states, with the population of those states. And that will give you a very good sense of how shallow the tax net is, because the talk is you need to widen the tax net. How wide is it going to be? Every single one of us that have had tax IDs for over 10 years, 15 years now, we will continue to be there. And that's the pattern that's going to have, especially over the first 6 months. So yes, I do not see anything fantastic happening in terms of tax collection. the laws are there. It's going to take a while for some people who are not in the tax nets to actually step into it and totally understand how they can play in that space. But it will take a while before we start seeing tax revenue rising and impacting the federal accounts.
Okay. All right. So still this week, the Central Bank of Nigeria decided to give more liquidity to the BDCs at $150,000 cap weekly. And of course, there's some rules and regulations that, follow with that extension to them. Now, first of all, while this was being mentioned over at the National Economic Council conference that took place still this week, the Apex Bank's governor, Cardoso, talked about the reforms, the gains from the reforms. My question is, do you think that when this liquidity was given access, although my guest of yesterday said he doesn't, so I'm asking for your view on this. Do you think that if this liquidity given to them, would it in any way, draw back the gains we've made, especially in the FX stability of Nigeria?
No, I don't expect it to create any drawbacks. Remember that already a lot of our debit cards from our banks can be used to make purchases in foreign currency online. So that's already given a lot of individuals access. And I want to believe that one of the reasons, again, I must say, the reason I say I want to believe is because there's actually a dearth of statistics available publicly, but the CBN should be aware of that maybe patronage and demand at BDCs are dropping. And what you don't want in a regulated sector is to start to have those players in the sector going outside the typical framework of operations to see how else they can enhance their businesses. So increasing that degree of liquidity to the BDCs is much welcome. It's then up to them to improve on their marketing and to attract more people to patronize them. The CBN itself, in coming up with that figure, and you want to multiply that figure by the number of BDCs they give, it tells you that the total amount at play in the parallel market is pretty much well known to the central bank as against the official market. And if you think about it, Chiamaka, just about January, there was talk of the gap between the parallel markets and the official markets starting to get wider. The aim of this is not to let it get wider because, like I said, if fewer people are going to using their cards and getting USD at official rates through their bank cards, fewer people going to the BDCs, and the BDC is not having enough USD, then that gap starts getting wider, and the BDCs will start doing something else. So it's a welcome development, and let's be certain that the central bank isn't just going to give them those funds and not regulate or not monitor what happens in the market.
All right, just lastly, just before we wrap up the program in like a minute, what do you think is the single biggest threat to Nigeria's 2026 outlook?
Oh, wow, that's a very interesting one. Well, I'm going to put it in a package in response to you, and that comes down to budget management. Okay, because right there in the budget, you have a package that involves the fiscal policy, the monetary policy, the details of each of those aspects, how they affect exchange rate, how they affect inflation. If the coordination between monetary and fiscal policies are not well maintained, if the government allows itself to be distracted more by politics, which is supposed to come up, rather than actual governance of the economy and the polity, then we're going to emerge at the end of 2025 with indices that are not exactly the most attractive to us. That's just the way I'll put it.
All right, thank you so much, Mr. Adebajo, for your insights on the conversation this morning.
Thank you, Chiamaka. It's good to be here. Right.
Well, that's it for Business Daily this morning. We're looking at some key issues that took place this week, some crossover from last week into this week, but key issues generally: the refinery situation, where Pengenson and the NNPC GMD is saying two contrasting views. However, Mr. Adebajo has made us understand and realize that Pengenson most likely is just fighting for its union members not to lose their jobs, and that he agrees with the GMD of the NNPCL that yes, the refinery is no longer viable. Of course, we looked at the capital importation inflows we got and how best we can do to increase those numbers and other matters that took place in this week on the business scene. I've been your host this morning, Chiamaka. Nwafor, same time, same place. Bye for now. This program is brought to you in partnership with the Central Bank of Nigeria.